Another one-take video. We're going to be talking about a second round of purchases I made on the market. I recently had some money, unexpected money, come in. That was in addition to about the $1,500 I did earlier this month, which I made purchases with. I felt justified throwing in the entire amount because I'd already accumulated a significant cash portion of my portfolio. We're talking about 20%. I'm 20% cash right now. Half actual cash, half T-bills, T-bonds, getting about 2%. They're relatively liquid and also relatively stable. So I'll consider them the pseudo cash. Anyway, so this video isn't going to be really discussing any major concepts, but we'll be going over what I purchased in this last round. So again, we got a huge slate of biotech companies. The first one I want to talk about is Schwab. It's a U.S. dividend equity ETF. So I'm really just in there for the yield and a little bit of growth. To be honest, because of the looming recession or possibly negative interest rates, I expect most of the normie mainstream blue chip stocks to have a rough time at some point within the next 2 years, but who knows these days. My job is very unstable. At the end of the day, despite all the stuff I do, most of my income comes from YouTube. And when you have income that comes from YouTube, you have feast months and you have famine stretches of time as well. So dividends and passive income from investments is crucial for me to maintain my lifestyle. I like diversification, but then I also don't. I mean, it's the classic expression, diversification kills your gains. I mean, where money is made is on focused plays. I kind of like to cheat and do both. As I mentioned in previous videos, I don't pretend that I understand, again, all these multi hundreds of billions of dollar companies. I don't pretend to understand how every facet of the U.S. economy works. I prefer to stay focused and know where, if certain treatments or certain biotech companies will do well, not if I know how many burgers McDonald's is going to sell next year. So to solve that problem, I've decided now that I like passive income, I like dividends, I'd rather just buy an ETF. So in this case, we've got the Schwab US Dividend Equity ETF, 3% yield. It's pretty diversified. I'll show on screen what's inside of it. You just buy the whole U.S. economy, and that takes care of it. So half of it is in ETFs, and the other half are in biotech companies. Now, the reason I'm so into gene therapy in particular is that, I'm an aspirational type person, and I feel like there's a lot of ground I have to make up. And so, I've done the reading. I've read about biotech really for the past 8 years very consistently, but also gene therapy, everything I can get. And I am convinced it is the future of medicine. It is the future of therapeutics. So I know that this technology and these companies will make me a millionaire if I put enough money into it. I fully expect to double, triple my money by 2025, 2024. As these companies slowly replace the more traditional pharmaceuticals revenue, they will make, in my opinion, billions and billions of dollars, and I intend to be there on the ground floor. I did it with Avexis, I did it with Spark, I did it even with companies I can't even remember right now, and that's why I'm focused. The only ones I really want to go over today are RGNX Bio, QURE, BMRN, and Fold. The rest of them I won't be discussing, and obviously QURE got the lion's share of the purchases this month because it's my conviction pick. I think this company is either going to be bought out, or I also think that, it could be a multi-billion dollar company just looking at the potential revenues between hemophilia B and Huntington's. Obviously, these are my own opinions. These are my purchases and why I'm doing it. Don't copy me if you don't understand what's going on. So the first one I'll talk about is Fold. I'll throw the pipeline picture up on screen now. But most of what's in Fold it's a long-term play. I think this company, might be somewhere in 5 to 6 years. They're still pretty early on everything, but the indications they're targeting are very promising. RGNX Bio, which is a gene therapy company I really like and I've been investing a lot into, is very interesting. I've heard it described as the ETF of gene therapy companies, and so pretty much what happened was they have some interesting IP and patents camped out on certain AAV gene therapy vectors, and they license them out to companies. So, for example, Avexis, one of the first ever approved gene therapies and actually used on people. I think, again, last week we talked about it. The Avexis treatment made $160 million in the last quarter, 160 people treated. It clearly works. That was based on RGNX Bio's platform that was licensed out. So RGNX Bio gets 14% of the revenues from that. And you can see here they have licensed that out to pretty much all these different gene therapy companies that are trying these different indications. So it's a good company to invest in, I think, if you want to get broad exposure and then kind of, play the field, right? You know that not all these companies will succeed, but, succeed or fail, RGNX Bio will profit from the winners without having to go through the trials and tribulations of, for lack of a better term, going through the clinical trials. I like this one. It's a single company, gets broad exposure, and their platform is proven with Avexis, and I think they're already posting strong revenues, and so I think I'll be increasing this one as well. And the last one is BMRN. This is actually a major holding by the Baker Bros, which is a large biotech hedge fund. I need to increase in this one. I think they're going to actually do well in the hemophilia A space, and they're already posting good revenues. But that's a roundup of this week's, or really October's stock market purchases, round 2. Looking forward, I have a lot of concern about the broad market. The way I see it, we're way overdue for a recession. There's so much hokey pokey going on with it. And I really only see two ways forward, either a massive correction or negative interest rates. And I think you're finding, even when interest rates are cut or there's QE or pseudo QE flushed into the economies, I think stocks are really stretched up to as far as they can go. Again, we just had another Fed meeting, interest rates were cut, and stocks didn't really react as much as they had in the past. I think the fuel is running out for that. So I think if you keep cutting, you're going to see negative interest rates, which is going to ensure Japan's zombie economy style scenario where Japan hasn't gone up, their stocks haven't gone up since 2012. So you would just see a slow depletion of everyone's funds, savings, and wealth over time. Negative interest rates would wipe out savings accounts over time. Stocks would dwindle. And so that's scary situation number 2, or scary situation number 1, or scary situation number 2 is that you have a massive correction. I lose 50%. Not looking good either way, but what's the alternative? The alternative is keeping it under your mattress and losing it to inflation anyway, which is they're going to be barely keeping a cap on that. And I'm already 20% cash, so what do? You got to use it somewhere. Other than that, I appreciate the comments on the channel. I'm seeing some organic interest, so that definitely is inspiring me to keep up with this channel and make more explanatory videos. I hope you enjoyed the video, and thank you for watching.